Hey yo, what's up YouTube? Welcome back in the channel. So this is TP Take Profit channel. Um TP Take Profit Academy. This is where we just motivate each other about wealth, I could say, about having money in the world, becoming someone in the world, guys, we've heard enough about poverty, more especially in Africa. I live in South Africa, so we heard enough about poverty. So what I have on my screen is just some sort of a motivation to the viewers, to people who will be watching this channel, to say you can get it, you can have it, this can be yours. You see, so I don't have anything. I don't have anything like this. Excuse me. I don't have anything like this, but I know that one day I'm gonna get it. How do I know that? I know that because I have a vision. I have a vision, and on top of that, I work, and on top of that, I am consistent. Right? So, talking about consistency, guys, if you are not consistent in everything that you're doing, then I promise you, you're not gonna get it. You're just gonna waste your time for you to have what you wanna have, right? So, I think my volume is not okay here. Let me just get my volume. Right. So this is what we all need to have, guys. This is the future. So I'm doing forex trading. I'm a beginner in it, but then I believe that I also one day gonna have to be a prof in it. I'm gonna be a professor of forex trading. You know, this company of TP Take Profit is gonna be huge. It's gonna be big because I'm dreaming big. Also, I always tell myself whenever I fail, that I will do it. That I will make sure I do it. I'm not turning back. Right? I'm working. I'm putting work in it. So I started trading 2021 for the real account, but no, I did the real account 2022. 2021 I was doing my practice. So from 2022 up until today, I've lost about 30k in rands, 30,000 rands. I never made any money, so forex market owes me a lot, but I'm not angry with it. I'm just happy that it did what it did to me, because now I'm humble. Now I'm learning. Now I'm learning to like with full passion, for me to end up, yeah, like having or being profitable. So I'm a beginner, guys. I know I have almost about 4 years, but still I haven't made anything. But with now, what I see right now is that my strategy, it's a beautiful strategy. If I can become consistent on my strategy, and then I will be someone big. All right. So okay, so let's go here and do this. So this is what I play most of the time when I do my studies. I play Luffy because it's just a chilled music without lyrics, where you can just work and work and work. Is that all? Okay, Luffy is doing a lot of videos, guys. So I'm not finding the one my favorite. So I need to find my favorite. Okay, let me just put on Smoke and Chill. Yeah, well, Smoke and Chill. Smoke and Chill. I really don't find them, but I think I could. Maybe let's play this one. Okay. So the session is about to start, guys. The session is about to start, so stay tuned. Stay tuned. So I'm gonna clear everything that I have here. I'm gonna clear everything that I have over here, and I'm gonna start on daily, right? Because I start everything on daily. There is a reason why I start daily time frame, right? So you're just gonna start here and go down with it and continue. So what I'm gonna teach today is different from my previous videos. I'm gonna look at the reversal, market structure, also the reversal. How does the market get to reverse? How do we confirm that the market is now on a turning point? Sometimes the market can turn out of nowhere. You need to understand it. You need to know candle information, candle language, candlestick language. Alright. So what do we have here? We have a low over here. We have a low over here. Right, we have a low over here. So this low went up to break structure above. Right over here. Right over here. This is a break of structure above. Right. So from here, every time after break of structure, we're expecting the market to come back inside, somewhere in between here, in between the break of structure and our strong low. So this low is called a strong low because it's the one that is responsible for the break of structure up. So it's a strong low. We're not expecting the market to go below the low. If the market go below the low, like what happened over here, so this become a change of character. That means we're no longer looking for taking buys, but we're only taking sells, because the rule of SMC says that market has a low, break structure, and then change your character in small time frame for the correction. Then we start going back. We start looking for sells in there towards the order block, and then change your character, and then we start looking for buys and targeting the next high. Right. So this is what we all have to know. If you are an SMC trader, this is what you're gonna just need to know. More especially when the market changes character, is what we need to know. When the market changes character, should always look for an opposite direction. So the market was going up, it broke this recent low and then came down. As it came down like that, that means there was an order block over there, and then the market went up, went down, broke structure, continued going down, Over here again, there was a change of character. Over here again, there was a change of character. After market changed character, market came back to the order block and then targeted the next high. And this is why we call this an uptrend, because we are taking out the highs and leaving out the protected lows or strong lows. You can call them. This is a protected low. So this is the structure, guys. This is the important structure each has to know when trading SMC. Trading SMC is the best. I love it because it deals with highs and lows, high, low, high, low. It deals with market structure. Alright, so let's clear everything. Unfortunately, I need to know how to clear everything at once. I haven't done that. I haven't checked how to do that, but then next time I'll do that. But this is a waste of time. Excuse me. Excuse me, guys. Right. Okay, so we need to know how did this push come? This push up come, ne? How did it happen? So now you see that the market has a low over here. This was a low. As that was a low, market came and did a high, right? And then there was this low over here. This is daily. You cannot on daily. I can see on daily that okay, that was actually a high actually that created this low. Okay, yes, this is the origin, a high that created this low, but there was also another. You see this candlestick? It was a push up from here. It was from here. It pushed up, and then pushed it down to create this low, and then this push up to push down, creating this low, was taken out, meaning that had been our change of character. This is daily, guys, right? So you're gonna see that better in 4 hours. Don't worry with it, but you will see it better in 4 hours, right? If you don't know how to identify it on daily, you can just even also switch to 4 hour, right? But then now we're just gonna do it on daily. So this become a change of character. Is this become a change of character? What do I use as my order blocks? In my order blocks, I use the following. So this is the bearish candle before the bullish momentum candle. Then this becomes my order block. So I will therefore wait for the market to come here to push up. So this one, this bearish candle before the huge candle momentum, bullish, I will say therefore the bearish candlestick will be an order block, right? Okay, because it is the one responsible for the push up. After that candlestick, the market had came up with an engulfing candlestick, and then another thing right on a turning point, like that. Right on a turning point, market comes down like that. Let's say this turning point has this candlestick. And then again we see the huge candlestick continuing the market to go up. What do? I use this. You see these tails. It can either be bearish candlestick or it can be bullish candlestick, but it is the one responsible for the push up. So I take both with the tails and then wait for the market to come back. As the market comes back, I'm gonna enter buys, right? Okay, delete that. So I'm no longer gonna drawing much, I'm just gonna explain. This candlestick, I use it also. This is a doji candlestick. I also use it whereby I'm taking both tails like that. This will be my order block, right? This one also. This is a pin bar candlestick. I also take it from my from my tail, both on both sides. What happened? That was network refresh. Okay. So I hope you guys now know which order blocks I do use now. So another order block which is just a different order block. Sometimes this one doesn't appear exactly on the reversal. This one maybe appear in the middle of the order block. Let me show you how. Let me just draw the structure and just show you how. You see the market coming to the downside like that, right? Then the market change character, and then the market pushes higher. As the market pushes higher, it leaves this order block, this kind of order block. It can be bullish, it can be bearish, it's okay. But as long as this order block is heavy, this huge candlestick, more especially on 1 hour, even on daily, yes, we always what do we take? We don't take the whole candlestick. Here we only take the tails of these candlesticks. Yes, you can take the whole candlestick, but then most of the time market will like to trade to this unfilled. I just call it unfilled tail because to me it seems like it's an imbalance, where the market has to come back in it and touch there, then go back. So tails are important in SMC strategy. So see something here happening. So after the change of character, this is the tail that I'm talking about, right? This tail has the body and has the tail. This candlestick has the tail, so I'm gonna only take the tail, and then from there I'm gonna take buys, putting my stop loss below the lows. You see, so what happened? Market goes bullish. That means over here this is a buy signal. Why is this a buy signal? It's because we have a change of character. A change of character on the left. We have an unmedicated tail, unmedicated tail, meaning that the market has left an imbalance right on the tail. So the market has to go back there, and from there the market will push up. So now this one, it's a breaker structure to the downside. If you can take a look at it, it's something like this, because people get confused. It's something like this: breaker structure to the downside. Okay, from here, change character, market continued, went up. So some will say, why are we not taking a sell to the downside over here? Because we're having a breaker structure right here. Why is this low not gonna doesn't hold for us to trade to the downside? So we need to there are few and several properties that we check. There's a lot of information that we check. We're firstly gonna check the market structure. On the market structure, are we on an uptrend or we are on a downtrend, right? Seems like the market is on an uptrend, as you can see up there, right? So over here, the market just came to this order block because this order block was not medicated, and Yeah, sometimes there is a reason why it turned over here. So for us, for the fact that we have changed character and we went up, you must take a profit here. The first take profit that is too important, because this is daily. It's a huge structure. Imagine trading this on 15 minutes and claiming to take profit right here. Sometimes it will hit you because from here, yes, the market can turn. So this is where mostly have to take profit. Okay, take profit right over here. But don't sell without any valid information, right? So I'll come back to right over there. So okay, here as you can see, we have this high and then we have this low, and then this broke the previous high. The push up broke the previous high, so this is a breakout structure. So we take this whole candlestick, we retain and say it's an order block. And remember when I said to you guys, I only focus on the now information, not the previous information. I do focus on the previous information, but I'm focusing less on previous information, and I'm focusing high on now information. So what do we see over here? So you see that the market came up. So you see that over here we have you see that actually here we have a break with a body. So this becomes a breakout structure. So this becomes a breakout structure, right? A breakout structure. So if this is a breakout structure, if the market wants to come here, this is what it will do. But if it doesn't want to come here, it will break this low. You know, this low that is responsible for the breakout structure. It will break over here. This low. This is the low, because this is daily candlestick, guys. If you can go to 15 minutes, you will see that this is a low. The market will break this low with a body. That will be our change of character, and then we're gonna have to look for a supply or other block that will bring the market to the downside. But over here, the market failed to break this low, right? More on top of that, now I need to say this. How do we see that the market will continue? We're gonna look at the previous candlestick, previous day candlestick, today's candlestick, and tomorrow's candlestick. So this is yesterday, this is today, this is tomorrow, right? So what will happen over here to see that the market is continuing? Okay, I'm just gonna have to delete all this. Okay. So this is what will happen, guys. So this day, this previous day, yesterday, it will print a low, right? As it prints a low like that, today the market comes down, take out the low, then close above that low. So this means that we should focus for buys the next day. Because what did we do? We did not break the lows with a body, but we broke the lows with a tail, meaning that is a sweep and a rejection for sellers. But we are to buy now. And then what do we do? How do we trade this? We just put a stop loss below. The following day, we know that our stop loss must be below these levels. Therefore, look for bullish candlesticks, because okay, this is a buy, guys, and then looking for bullish candlestick, looking for bullish opportunities to buy, right? So this is a story, guys. it can happen the other way around for sellers, né? For sales. Now I'm about to delete this. I will have to learn. So right over here, what do we say about this? Let's check between 1, 2, 3. It's the exactly same thing I've said. So the market on this day, on the 21st, yes, on the 21st, printed the low and printed the high. So on the 22, the market went take out the low of yesterday of the 21 and then went back inside, meaning that this is what I've been explaining right there. And now this is our order block. We're gonna be looking for market tapping in, going up, or we're just gonna be looking for bullish bullish candlesticks and bullish momentum, whereby we have to put our stop loss right below here, these levels. So can you see that this became a sweep of the previous low of the previous day candle low, a sweep. After the sweep, the market, we knew that the market will never trade below this low, and then therefore we want to take a bullish buy, right? So here, guys, I'm teaching you a lot of things at the same time. You just need to listen and take note, write these things one by one. I'm gonna say a lot of things, but please have a book for you to write them down. Then market continued to test our structure up there, right? Market went up and broke the structure. Alright, as market breaking structure, it went up there, né? So here, if you can check what's happening over here, how did the market calm down and all that? We're gonna look at this. We're gonna look at this. What happened over here? Look at the momentum of this candlestick, and then the following candlestick, and the following bearish candlesticks. With this, there was huge momentum in the market. There was huge momentum. This one was not huge than the previous one, but what happened is that the following, this was on the depth, né? This candlestick formed a low, formed a high and a low, right? And then this high was swept. After this high being swept, the following candlestick is the one that swept the previous high, right? So we took that high of that candlestick, and then our stop losses need to be above here, so that we can say, okay, this one is about to go to the downside. So this strategy, guys, is not just traded anywhere, because what I saw is that also here is the same thing that happened, right? It's the same thing that happened over here. But what do we need? We need we need at least the previous candlestick to have a volume, a huge volume, and then the next candlestick to be to sweep the previous high or previous low. But if it becomes like this and that, so it doesn't give us any ideas on what is going on over here. And another thing, on an uptrend we're breaking structures, so you can't decide to sell over here we need to have, if you want to sell on, if this high was gonna hold, we was gonna wait for a change of character, maybe somewhere here. Market had to come down, trade here, and then obviously it will have give us some sort of this information, or back to the order block, then trade to the downside. So we chill, right? I want you to look at this candlestick. This candlestick. So a candlestick that comes before momentum in the market, before engulfing candlesticks, before huge long candlestick, that small candlestick that becomes that happens before the huge movement in the market, that is called an order block. This candlestick is an order block. So I'll therefore go on it and draw an order block, because Yona, it doesn't have the imbalance. This candlestick from here, from here above, it's where we have imbalance. So market came in it and then tapped in, so it did fill in all the imbalances and then tapped in and then went up. So right over here, we're just gonna take a bullish. Because it's a okay. We don't have a break of structure side, but we're just gonna take a buy. Hence I'm saying you guys need to just write down, and then when you write down, I'll make a lot of videos, guys. So when you write down, do what? Do me a favor, please focus on easy information. If there is a point where you don't understand, I will make a video again tomorrow, and you will end up understanding what I'm doing here. You will end up understanding what I'm doing right here. So over here I was gonna take a buy, and right over here, because I said that the previous high of the previous day was swept. That means the market was ready for a 10, right? As it was swept like that, we had this candlestick that we say we can sell. This candlestick that is responsible for the sweep, we can just put a stop loss above its high, and then just risk to take a sell. And then from here, we know that the market is actually going up, so we're gonna buy the market. So this one now becomes the break of structure. Okay, remember here I need to take sells. Right here, this is where I need to take sells. So so market break structure. As market break structure, what happened to the market? Look at this low. Now when I talk about changes of character, I'm talking about this low. This is a high, comes down from the low. This low is the one that is responsible for the break of structure to the up, and then therefore market forms another high right over here. The market forms a high. From this high, market traded below this low, because this is our protected low. So therefore when the market trades below this low, we call this change of character. Meaning from here, we're no longer looking for buys. We're only gonna be looking for sells. Okay, so market comes down here. As it comes down, okay, it comes down and stuff like that. As it's coming down, but we want to continue with our bullish moment, right? We want to continue with our bullish moment, right? Let's look at the candlesticks individual. So in here, which candlestick is unmedicated? This one is unmedicated. This one is medicated by this one, and this one also is not medicated, and this one is also not medicated. Okay, so within these ones, this is just a lot of liquidity. The way these candlesticks, the structure of these candlesticks it shows that in the small time frame, it's just something like this. I don't know where my computer is now. It's just something like this. It shows that this is what the structure has been on small time frame over here. So in this point of time, I will focus on my lowest low, whereby my lowest low could be this one that is not medicated, or it could be this one also that is not medicated. All right, let's do it. Let's take this one. Let's take this one, okay, and say, okay, we're gonna say this is our order block. And sometimes people use Fibonacci and all that. So from here to here, we need to look at our lowest levels below the 50%. That which one is unmedicated between our lowest level, our lowest low on our 50%, which one is not medicated. And this one is also not medicated, this one is also not medicated. So let me do an example there. Actually, I don't want to be confusing, guys. We're just gonna get deeper. Let's leave this one and use this one. I'm gonna explain what's happening to you here. Okay, or should I just touch it for you not to be, sometimes if you sit down and watch this video, you're not gonna be confused, right? We have this as an order block. Sometimes our order blocks get swept. They don't get taken out, but they get swept. So this is our unmedicated order block, right? We see what market did there. We see that the market swept this low and closed above. That means, because we were looking to take buys from here, right? At least to go back inside here. So the market swept this low, right? So as the market swept that low, now that means what? That means we're gonna be looking for bullish entries when market comes to this low. The market did sweep this low, but then still the bullish entries would have been given to us. That's why you see the market buying over here. Okay, now why did the market not get there? Or why did the market come now to this order block? See, look between 1, 2, 3. So the market created, you can also include this one because there is a sweep over this high also. But then, okay, you see the market closed straight where the previous candlestick has closed or has left the high. The market closed there, right? So that means that is a sweep. That is a sweep. That is why the following day the market never traded above this candlestick. What did it do? It just went down. So I'm trying to explain what has happened over here. Why did we not? Yes, we did take buys. We had buys. This became valid because there was a sweep on our order block, and then we had a buy chance. And then now for this to go down, we had this situation for me, and the market came down, right? Now it came down to this one over here, and then had a what? Had a buying. This is a buying situation. Had a buying situation, right? From there, what happened? It seems like the market also swept the previous high also over here. If you can take a look at this high, this candlestick, and that selling, the market has also like did the same thing over here. Because if you can check, what we had over here is that we have that. We have that high being swept. Let me try to zoom this one. We have this high being swept. If you can clearly take a look in it. So this high has been swept, and then now we're expecting the next high. to give us selling opportunities. More especially, we had a break of structure right on the previous low. This previous low, we had a break of structure on it. Break of structure, meaning that this high is a strong high. And what market did, market had swept that strong high, came back again, swept for the second time. Now we know that between 1, 2, 3, we're gonna be looking for bullish momentum. And that's what happened. So the market changed character. As market changes character, see the candlesticks that I told you about. Now, look at the candlesticks that I told you about. So after change of character, market has to go back, right? As market went back, we had this unmedicated origin order block, right? And if you can look right on it, these highs are all a sweep. Market swept the high, came back, swept the previous high, went down, right? So I'm gonna explain everything that's happening over here. So let me just explain the turns, where the market had to turn now to our order block. Because if I'm gonna explain everything, I see you guys gonna get confused. So this is the order block. So market came in very heavily. Okay, it's either it's gonna sweep this high, this previous day high, or it's gonna sweep the high of the order block, just like here. And with which candlestick, if you can take a look at the candlestick, is the doji candlestick. This gives us this gives us the information that yes, the market is gonna go to the downside, meaning that we can trade a sell opportunities, but the market will never come above this high, right? So from the following candlestick, the market went down, never traded above. Market went down up until it comes to this order block right over here, up until market come to that order block, and then went up again. So this is how the market changed to go to the downside. We had this previous candlestick coming in with a huge momentum, the following candlestick coming in as a doji, sweeping the previous high, and then from there we're expecting the market to go to the downside, because here this is the order block, the interest level, point of interest level. So we should be looking for informations like that on daily time frame, right? Coming back right here, let's see. Okay, so the market came in here, tapped in, went back. As it goes back, we see that okay, we have these previous highs, né? As we have these previous highs, these previous highs get swept. They get swept also. They get swept. That means the market has a possible way of going down. After sweeping any high or any low, the market should have a turn. Right, let me show you now what happened after that. So right, this is a point of interest up until this level, right? The point of interest up until that level. Okay, so market came to that level and did what? And sweep it, and sweep that level. Why am I saying it's a sweep? Because it broke with a tail, so here is that the structure we call. So the previous low got swept by by this candlestick on the 20. It got swept. That means the 19th, on the 19th the market formed this low. On the 20th the market formed this low, and then that low, and then came back inside to close right over here. That means that is our order block to look for bullish movement. Plus there is extra strong information whereby we swept this low and this huge low, so we will be looking for going up. So the reason why the market had to come and sweep, remember when we sweep this, okay, when we sweep the high here, Most of the time we're looking for the next high or the next low to be taken out, right? So over here we were looking for this low to be taken out, and yes, this low has been taken out because the market over here, it did form a low lower than this low, so you will take profit right over there. So again, it sweep this low, and then that means it will have to come and sweep this low. So if you can check from here, people have been selling the market from this level. So this is what we call a resistance level. To us, it's liquidity. That's when we knew that the market will never actually have to come down from here, because we just swept a low and then this is a high with liquidity above. We knew that the market had to come to this order block, because we had a change of character right over here. If you can take a look at it, we had the market forming a low, going up, forming a high, coming down, breaking that previous low, forming a low, and then coming up here, sweeping the low, going back to that liquidity, taking out the liquidity. Then from there, because we have a breakout structure to the downside, which is a change of character, and here is an order block, we just took out liquidity. We're gonna have to look for trading to the downside. So what happens when the market gets to our order block? So we see that the market has this high, previous day high, with full momentum towards the order block, right? The following day, what the market does, market sweep the previous high inside the order block. What does that mean? This means that this high will never be taken out. That means we should be looking for sales from here. From after this candlestick, we should be looking for sales, and that's what happened, right? So market went down, and then it was never traded above this. It just went down and stuff. So guys, I don't want to make a long video, right? Because I have a problem with making long videos. when I start talking, I don't want to stop. So this is what you should know by today. Like, focus on this, né? Where does the market turn? Okay, so we have an order block like this, né? Break structure, break structure, come back to order block. Okay, this becomes a breakout structure to the upside, and then this becomes our protected low. This means the market should not break or trade below. If it trades below, it must be a sweep. It should not be a body candle break. That means it will be, this low will never be protected. This low will be a change of character. Alright, here we have what? We have an order block, right? Now, what is it that we're mostly gonna look at here? We're gonna look at these candlesticks. We're gonna look at this candlestick. This candlestick that taps. This candlestick that taps in, and then the following candlestick that come. Let's change the color. The following candlestick that come and sweep this low. And then what do we see the following day? A bullish moment. So this is what you should get to look at when the market, this is what I need you to go back on your chart. Just look at this situation whereby the previous candlestick got swept by the current candlestick, and the following day that candlestick it's having an opposite direction with huge momentum. So this happened specifically on our order blocks. Like, go take a look at where our order blocks are. This is a situation where I want you to just take a look at it. If you can take a look at this is daily information, so on this day they say towards the order block, this is what the day happened. This is yesterday. Now today, this day, we see the market closing above. When you wake up tomorrow, don't hesitate to put buys on your chart. Just put buys on your live account, because this thing is a rewarding, it's a profitable strategy. So right there, I was just showing you market structure, what kind of order blocks I use and stuff like that. So go back, take note, sit down, and let's walk this journey together. This is TP Take Profit. Niggas, I am signing out. I'm signing out.